Hey guys, Boris Schlossberg from BKT. Another wild and absolutely crazy week of volatility in the FX markets. We're clearly trading right now very much off macro rather than micro themes. And this is one of the reasons why we've been very, very cautious with our model. Because remember, our model is really based much more on micro environment rather than macro environment. So we try to stay cautious, try to pick the trades that we think have the best probability within this environment, and wait for the situation and the conditions to sort of return back to normalcy. We'll have to see how that goes next week. Everybody who wants to read my column, please go ahead. I took a special report today on BKT and wrote about the Fannie and Freddie Mae rescue rather than talk about just the week coming up, because I think macro issues will still continue to dominate. But I think one interesting thing that came up in our live trading session from one of the subscribers that I wanted to address. People have asked us, when you guys issue your releases, they're always fundamentally based. I'd love to see the technical conditions under which you guys trade. And here's the interesting thing that you need to understand. The only technical factor that we consider when we trade any of our positions is trend. Because we think that the only thing that has any merit, technically, is trend itself. In other words, we want to see pretty much currencies in trend, because they will give us that secondary technical impetus, hopefully to be on the right side of the trade. So dollar yen was a perfect example this week of a currency being in trend and selling it at a good value level. What we don't want to do when we trade trend is to chase price, to sell stuff when it's really what we call walking the band. Even though when things are extended, walking the band will continue to have movements like you have here. But that is not a high probability trade. Typically you want to be able to sell it within the upper range of the trend channel so that you have good risk-reward ratios. You see, for example, if you look on the flip side of it here, dollar yen, in this example, if you were to simply buy here, you're really looking on a downside move until it finally resumes its upward trend. That's why trying to buy in the lower value of the region tends to be a better trade technically. But as far as technicals go, the only signal we look at is trend, because it's the only thing that really matters as far as price action goes. So dollar yen, perfect example of buying in trend at good values and also using good money management techniques. Take a look at this. I just want to show you. This is the daily chart. We came in basically off of this candle over here, and our stop was right above the prior day's high. And let's see what happened, because this is another example of how using stops at those levels really saved us. We came in, and as you can see, dollar yen actually rallied against us in early Asia on sort of false assumption of risk aversion coming back, or risk assumption coming back, and it ran almost to the daily high, but failed there. And this is a key thing. Had it broken the daily high, the probability of a trend change probably would have been much higher, and that's why we would have stopped ourselves out and left the trade. We're able to survive the counter trend move by putting our stops at the proper level, and then as the day progresses, obviously risk aversion started to really kick in, and we started to really move in the money. By the US session, we made our T1 target, and then we basically trailed the trade and made 50 points on a nice clean trade. Would I have loved to have made more? Yes. Unfortunately, you're going to get retraces, and unfortunately, it just wasn't going to be a one-way trade. So regardless of how you were going to manage this, if you were going to manage this with proper money management technique, you were just going to get ticked out on retraces here. But on a long-term basis, this turned out to have been a really great move and went all the way as low as 105.70 ultimately. Our entry was around 108.65. But this is always the mix of using proper money management and trying to get as much squeeze as possible out of the trade. So this is BKT for this week. Being selective, trading within our model, even when conditions don't really warrant a lot of our own type of conditions. And hopefully next week we can get a return back to normalcy, a little bit more of a micro trading environment, and we'll be able to put out more trades. Wishing you the best of luck. This is Boris Schlossberg for BKT. We'll talk to you next week.